Good meeting you.
Very nice to
I'm
meet you.
Kenzie, I'm a moderator at 50. We have Peter from Lux Capital. And thank you so much for showing up today. It's a pleasure to have you speaking at the conference. So we have a few questions here for you. So how did you decide to get into venture capital in the first place?
So I had a fairly non-traditional background. I came really from Wall Street, traditional Wall Street. I worked at Lehman Brothers in equity research. But in 99, 2000, we had a vision to build a much more deep technology-focused investment firm. And so since then, we've grown considerably from humble beginnings and now manage 5 funds totaling $1.1 billion.
Got it. And there's a lot of talk about Silicon Valley now, whether it's winter or is it spring, this year. So what's your point of view on that? Is it spring or is it winter right now?
Yeah, it's a great question. I think it really depends largely upon the sector. I think in January or February of 2016, with the Asian markets plummeting, people felt real fear and concern. And they were waiting for a shoe to drop that just never really fell. And so people are still hesitant, certainly after the presidential election, but business continues. And I think it's kind of a tale of two cities, where in areas that are much more on the frontier technology, whether that's artificial intelligence and deep learning or autonomous cars, there's been this huge boom and surge of investment, where in other companies, more traditional software, SaaS, internet, there's been a little bit of a slowdown. And so I think it's really dependent upon the area, but you're still seeing huge global capital flows into this industry.
Got it. So are you saying that some of the more traditional Silicon Valley type of investments, there's a bit of a slowdown, whereas emerging markets, emerging verticals, you see a little bit more influx of capital?
I think that's right. I think that people have just generally put the brakes down, or at least put pause in a lot of other areas that were overheated. For instance, mobile and a number of other areas that have been kind of the driver of the past 10 years. So people right now, if I was to kind of put my finger on it, it feels like the investment community is looking for the next major secular wave, and increasingly they're calling it this grab bag of technologies called frontier technology, which is driverless cars and AI and drones and VR and AR and a range of other things. But it's still at the point where there's kind of a process of discovery to find what's next.
Got it. As an extension, for this question, at Lux Capital, what would you define as your particular, innovation and frontier sector that you see?
Yeah, so everything that we do is deep technology, which means that it's physics, so, electrical engineering, computer science, biology, chemistry, which feeds ultimately these applications. So we've been less focused on the end application and industry, much more on the core technology, which has served us well, certainly in the last several years, where a lot of other people now are going to the foundations of technology versus just the end applications and consumer applications. And so I'd say probably the two largest investment themes for us is something that I kind of more poetically describe as intelligent machines and machine intelligence, but that's really robotics and AI. But generally the theme of automation is something, and automation not just replacing human labor, but doing things that otherwise were not possible, or making the average human superhuman, is something that we've been big supporters and big investors in.
That's very impressive, and I'm sure that because you have such focus on deep tech, your diligence process will probably be slightly different than other firms if you do so much so in looking at technology. So what are some of the biggest key indicators that you have seen as in your investment career wise that predicted the success of a long-term return for the fund?
It's interesting, as forward-thinking as we are in kind of the sectors that we're investing in, I think that we probably use a lot of the same signals, psychological signals, that other investors use in assessing a team. And ultimately, at the end of the day, as much as the core technology matters, it obviously has to work. As much as the market application, the product, these are all critically important. It's ultimately really the person and the founding team's ability to persist through often challenging times, or to adjust the business or help it evolve in a way that will put it up for success. That is the critical, kind of necessary step for a company to achieve great heights. And so we have seen so many companies that should have failed for whatever their initial idea was, were it not for that founding team that was able to have something that was just using their own ingenuity, something that helped them identify really the right product or application, or in many cases, they've kind of swapped out the technologies and have later succeeded. So we still believe in the primacy of the entrepreneur and the founding team above all else, even if we're core investors in technology.
Got it. By placing such focus on the entrepreneur founding team, and they somehow wiggle, even if the initial market fit is not there, they'll find some ways. What would you say is roughly the percentage of the people that you've seen that pattern of they have to shift a little bit to find their market focus later on?
So we're most often certainly the first institutional investor and often the first money into a company. So I think I'd be hard pressed to think of a company whose initial business plan and idea was exactly what it ended up becoming.
Wow.
So when it's at that really kind of formative stage, things are still fairly nascent. I think it would be pretty dangerous if someone said, this is all I'm doing, I'm not listening to market feedback, I have this idea, I have this vision. Even if it's generally right, there are things that are important kind of adjustments that are made over time to really, if they don't do it, if they're kind of inflexible and stubborn, they'll probably either not succeed or they'll die.
Does that make you a very hands-on investor, Peter?
I think you have to be at the stage that
Right.
we invest. I've often, sometimes longed, given how exhausting it can be, that I dream of this day that it's like a day trading phenomenon, that things are just happening without your involvement. The reality is, these are people, these are complex relationships, and so I think for a lot of the founders that we put in business, they've never done it before. They really require a lot of input and guidance and feedback, and so that's something that we're happy to do, and I think is really necessary to help them succeed.
That's great. Well, more work for you, but better for the entrepreneur,
Yeah,
right?
That's fair.
Any last words for Silicon Valley entrepreneurs? Maybe how to find you, or what's the words of wisdom for them?
Yeah, I think the words of wisdom, my opinion is this business in general, being an entrepreneur, being a successful entrepreneur, is really going to come down to persistence, because there's probably 10 times as many ways that a company and an idea can fail, and if you don't have the grit to continue to persist and proceed forward, there's so many different off-ramps that make it easier to just go on to something that's more kind of safe and stable. So my personal view, and this also happens to represent my personal experience, which is often why most people kind of guide them, others based upon their experience, is that persistence is maybe not everything, but probably 90%.
That's amazing. Peter, thank you so much.
Thank you.
Good to have you.
Great to be here.